flow is about the cash going in and the cash coming in and out. Right. So now my English wasn't good, but you get the picture. It's about the cash going out and the cash coming in, and we talk about an inflow and an outflow. So in other words, can you see it's not linked to when it was paying for or receiving from. It's linked to, was it received in this year? Yes, cash flow. Okay? So in other words, if I have rent income and I say it's 1,000 rand a month and I received 13,000, can you see 13,000 is cash coming in? Not 12. 12 is the income, because the income we measure according to the timeline. But the cash, we measure it, we got it this year. Okay. So, you guys are fine with note 1. You've done that. We've done note 2 with the cash. Yesterday I started with the dividends with my kids, but I will do it again. So, if we remember, right back at the start we did shareholders for dividends. And I said to you, it starts with a balance. Now, let's call this balance the opening balance. Right? We always have an opening balance. Now that opening balance is last year's final. You agree with me? Because we never pay the final in the year that we declare it, we pay it the next year. So we have an opening and then we pay. We have an interim and then we pay. We have a final and then we balance. Can you see closing balance, opening balance? You see? Now, if you look at that, what will show me cash going out? Which word there? Bank. So in other words, what does the bank go with? Can you see the bank goes with the opening balance and the bank goes with the interim. In other words, it will be your opening plus your interim will give you what you pay for dividends. You get me? Okay. Now, can you also see that if we want to do it in a T account, let me just make this smaller that you can see both. If I do it as a T account, I can also do it alternatively. I can say I've got an opening and a closing and a bank and a total dividend. With this method, I can also calculate my bank. Because what is the opening? It's last year's final, right? What is the total dividends? It's the interim and the final. What is the closing? It's the final. Can you see it cancels out? So what are we actually paying? The opening and the interim. So you're going to look at what information they give you. I think I threw away mine of yesterday. No, it's this one. So now if I look at this, can you see there's 3 methods that you can choose to do. But I will always say, first go see if you can see what's the opening or the interim. They will ask it for you. Either they'll give you the face of the cash flow and you have to fill in dividends paid, or they will give it to you, like they usually give note 3, where they say 1, 2, 3, 4, solve the Roman numbers. Ne? Then they will say dividends paid, and then you'll have to do a calculation. But they will not ask you to do note 3 like this or note 3 like the T. They won't tell you the method to use. Right. Okay, but I'm going to show you all 3 methods. So now, the easiest for me is always the opening. The opening plus the interim. Now, if I look at the opening, you're going to look if you find shareholders for dividends. Now, do you see shareholders for dividends? Yes, there it is. And can you see 2021 is the opening and 22 is the closing. So can you see the opening is 20,000? You guys get it? Okay. What is the interim? Do they give me info on the interim? Yes, because they gave me the retained income note. Now we usually say interim final. Another way that they write it is saying paid recommended. So you need to know that paid is interim, recommended is final. Why recommended? Because it's not paid yet, you see. So that paid one is my interim, 24. So can you see the dividends paid is 44, right? If they, now I'm going to tell you this, if they didn't give me this, they only gave me the dividends is 60,000. In other words, they only give me the total dividends. Is there a way for me to calculate the interim dividend? Oh, you guys had it yesterday. Why are you quiet when the others are here? Come. What is the total dividend consist of? Final and interim. Is there a way for me to find the final? How? We just said the closing balance is the final. So can you see if I say 60 less 36, I'm going to get the interim 24. You guys with me? Okay. So that's the one method. The other method is the T account, which is that one. I somewhere did it here. Got an opening and a closing and a bank and a total dividends. Right? So, the opening is 20. The closing is 36. Okay? The total is 60. So it balances on 44. Okay? Another method to do it. Yes, baby? Let me quickly. The other way is the vertical. Now I know a lot of people prefer the vertical. For me the vertical is always more difficult because I grew up on T's. Okay. So, but the vertical I always remember it's bracket, bracket without bracket. Okay. So the amount in the financial statement would be the total dividends. That's your total dividends. Then it's your opening balance, it's your closing balance, and then you get your dividends paid. Okay. Right. And since all of this is calculations, you don't have to write these fancy words. You can say total dividends, opening balance, closing balance, dividends paid. It's short. You don't have to write all the beautiful words there. Okay. So let's just quickly, I know it feels like I'm doing something that we're not practicing. So let's quickly practice. I give you shareholders for dividends. I say 2026, 2025. I say here it's 17, here it's 10. And I say to you, the total dividends is 30. Calculate how much was paid. Doesn't she have a stapler? No, but ask her that if she doesn't have a stapler, she must come and tell. Okay, is everybody done? Oh, sorry, this is 70.
Then pause.
It is paused.
No, it's not. No, it's not.
Just put, is it recording? So in other words, I record it. Let me just quickly record it. Can we be quiet? So if I look at this, basically, let's just review. So the one method is the opening plus the interim. The interim I got by saying the total less the closing. Right. That gives me 13. So in total, I paid 23. If I did the T account, I say opening and a closing and a bank and a total dividends. So then I just replace. The opening is 10. The closing is 17. The total is 30. Balance on 23. If we did the vertical, bracket, bracket without bracket, total, opening, closing. Everybody happy? Okay. Now I want to explain to you SASH. So remember, when we start our cash flow, it starts, oh sorry, are you still copying? When we do the cash flow, it most says cash from operations, which is note 1. Interest paid, which I also get from note 1. Dividends paid, which we've done now. Tax paid, which we're going to do now. And tax paid, you always do a T. Please, it's very confusing to do the vertical. The T makes more sense, but I will show you the vertical and you can decide what you want to do. But please make my life easier and do the T. Okay. What is happening here? What is this? What is this? What is this? I don't know. Just throw away. And it's all recording so everybody can hear me. So when I do such, I want to do the tax paid. Here we go. So we do such. So when I do such, remember it worked like this. I had an opening balance either side, ne? And then I paid it. Or I had an opening balance and then such paid me, ne? Then I had 2 banks. That's a given. Then I had my income tax, and then I balanced. Okay, you guys get it? So I'm going to follow this pattern. And I'm going to set up, now you see, and your closing balance can be either side. Right. So, first thing you need to know is when I talk when I say that such has got a debit balance, it means it's a current asset. It means it's a receivable. You get what I'm saying? If such has got a credit balance, it's a current liability, so it is a payable. Now, they can give you the information, words, in any format. They can give you basically where they say, oh, such 2026 and such 2025, we have 10,000 debit and 7,000 credit. They can give it to you like that. Then you have to know here it's a receivable, so it's a current asset. Here it is a payable, a liability. Okay. Or they can give you the actual face of the balance sheet, meaning they give you such either with the receivables or the payables, then with the current assets or the current liabilities. Either one. You need to know where to get it. Is everybody sharp with that? Okay. Now, let me show you. So now let's say they tell me income tax is 70,000. I'm going to do it like this. And this is a very lucky song. So I'm going to have such income tax. Now I'm going to say I have a opening both sides, and a closing, both sides. A bank and an income tax. Right. Why both sides? Because this account jumps. Now, to get me not to be confused, my song continues, so I'm singing. I have an opening and a closing and a bank and an income tax. Receivable and payable, receivable and payable. Why? Can you see? That's going to help you. Can you see it works in a block? Receivable, payable, receivable, payable. It works in a block. Now, if I look, remember your alt here is your opening. OO. Alt here, opening. So that 7,000 is a what? It's a credit balance. So is it a receivable or a payable? Payable. So that one doesn't work. Ne? My tax is 70. Now, if I look at 26, the new one, is this a receivable or a payable? Receivable. Receivable is also credit. So that one is out. So how much did we actually pay? 87. Which makes sense. Ne? Because the start of the year I still owed 7. So I paid that full 7. I paid the 70,000 income tax, and I even overpaid with 10. You get what I'm saying? So I paid all of this. Let's try another one. Let's try another one. Can I have you copy? Okay. What I'm going to do is I'm going to do this. I'm going to write down, I assume you still need to write that. So I'm going to write down another one. I'm going to say SASH 26 and 25. 26 I have 11,000 debit, and 25 I have 21,000 debit, and my income tax is 100,000. Quickly calculate my tax paid. So, let's see if you got it right. I'm going to do a T for SASH. Ne? Remember, this isn't income tax, it's SASH. So I've got an opening and a closing and a bank and an income tax. Receivable and payable, receivable and payable. Okay, now my opening is 21. My opening is a receivable. My income tax is 100. And my closing is also a receivable. So, is it 90,000?
Yes.
Let's give you another one. Yes. What, don't you want to practice? There's lots of pages. Open the cover, get. Here's also. Okay, so if I look at this one, I'm somehow going to use the T here and do the vertical for you as well. So the T, I say, I have an opening and a closing and a bank and an income tax, receivable and payable, receivable and payable. Both is payable. So the opening is 6.2. The closing is 5.4, and the income tax is 61. So now if I balance, it gives me a bank of 61,800. Okay. Can you see if both is payables? It's the same format as shareholders. I'm glad you saw that. So now, when I go to tax paid, you will always start with a bracket and end with a bracket, but your balances will depend. So, if it's a debit balance, or if it's a, let's do it like this, if it's a receivable, it's without a bracket. If it's a payable, it's with a bracket. Closing balance. If it's a receivable, it's with a bracket. If it's a payable, it's without a bracket. Okay. Can you see why I'm saying the T is easier? But if you prefer to do it like this, it will be the following. You'll have your amount in the financial statement, which is the 61. The opening is a payable, so it's 62. The closing is a payable, so it's 54. And that gives me 61.8. If I look at this one, if I do shareholders for dividends, I say, I got an opening and a closing and a bank, and I'm doing it wrong. Yes, why are you eyeing me? You should have picked it up immediately. But you said nothing. So, no. So, I have an opening and a closing and a bank and an income tax. Total dividends. Thank you. Who else saw that but said nothing? Okay, so let's start. I'm going to look for shareholders for dividends. Shareholders for dividends I will find in the balance sheet. The balance sheet usually have a note, but because they usually want to include it in the current liabilities. So there I see it. There's my shareholders for dividends. So my opening is 620. My closing is 921 600. Okay, can you see they give me total dividends, which is 126 1961. Can you see I added the two? Okay, and that gives me what? Is this the best method to do with shareholders? No. What is an easier, quicker method?
Opening plus interim.
Opening plus interim. What is the opening? It's that 620. And the interim they gave me. You see? Don't fall in the trap. So that gives me 139,000. Anybody who did this method? Okay, this method, remember, bracket, bracket without bracket. The total is 1691600, opening 620, closing 921, and that gives me in the end 139,000. Sharp. Everybody got that? This is 4 ticks. Actually, with dividends, it's only 3 because they're going to say you could have done it that way. 3 ticks. Okay, now let's do such. So when I do such, I'm going to do it here that I have more space. Such. I have an opening and a closing and a bank and an income tax, receivable and payable. Receivable and payable. So now I look. If I look at the old year, which is 2024, I see such is a liability, meaning it's a payable, meaning it's credit. No, so it goes there, 72. When I look at the new year, 25, I see such is now a receivable. Current asset is a receivable. So receivable is also on the credit side. Right? Now I need to go look for income tax, and I'll find that in the income statement. They tell me net profit income tax for the year is 780. So I just add the 3. Okay. So 72 plus 780 plus 65 gives me 978. What? 917. Okay. If you did it vertically, let me make it nice and big. Vertically, I know I have a bracket for the 780. Then the payable is also in a bracket, and here the payable is without a bracket. The receivable is also with a bracket, sorry. And that gives me 917. So everything's brackets here because everything was paid.